So, why is Japan's economy at such a massive tipping point? To really get it, we have to start with something that sounds, well, kind of impossible. Something really, really strange.
Right. A company actually said sorry for a 6-cent price hike. In most places, that's just Tuesday. But in Japan, for decades, prices just didn't go up. They stayed flat, or sometimes they even went down. So a price increase wasn't just rare, it felt totally alien. To understand why, let's use a simple analogy.
Okay, picture a village full of monkeys.
In this village, bananas are the only thing that matters. And pebbles, that's their money. It's simple. One banana costs 5 pebbles.
Then, a problem hits. A banana surplus. There are just way too many bananas for all the monkeys.
So, what happens to the value of a banana? It drops. Today it's 5 pebbles, tomorrow maybe it's 4. The day after that, who knows, maybe 3. Now these monkeys are pretty smart. They're thinking, hey, why would I buy a banana today if it's going to be cheaper tomorrow? So they just hold on to their pebbles. All spending grinds to a halt. Nobody's buying, nobody's selling. The banana farmers can't make a living. The monkeys just sit there and wait. The entire monkey economy just freezes solid.
And that frozen monkey village? That's a pretty good picture of what happened to Japan. For nearly 30 years, it was stuck in this epic battle with falling prices.
This whole phenomenon has a name. It's called deflation. It's the exact opposite of what most economies deal with, and believe me, it can be incredibly damaging. When everyone is just waiting for a better price tomorrow, nobody spends today, and the economy just can't grow.
So, how in the world did Japan get here? Well, it all kicked off back in the late 80s when a huge economic bubble burst. That started decades of this price freeze. Then you get 2 major global shocks. First the pandemic, then the war in Ukraine. And those just sent shockwaves through the system that changed everything.
Okay, now here's where the story gets really interesting. While pretty much every other country was fighting to keep prices down, Japan was doing the exact opposite. For years, its central bank was desperately trying to make prices go up. They were trying to thaw out their frozen economy.
And they threw everything they had at the problem. I mean, they made it free, or even paid people to borrow money. They pumped trillions of yen into the financial markets. They even intentionally made their own currency weaker to try and boost the cost of imports. These were some of the most extreme economic experiments ever attempted.
And you know what happened? For years, nothing. Not a thing. The deflationary mindset was just so stuck in people's heads that none of it worked. People kept saving. Prices didn't move. The economy just stayed frozen in time.
And then, all of a sudden, the ice started to crack. Inflation. It finally arrived in Japan. But, this wasn't the gentle thaw they had been hoping for. It was more like a scorching heat wave that came from overseas.
See, for over a decade, the Bank of Japan had this one simple goal: get prices to rise just a little bit, about 2% a year. Just a little warmth, to get the economy moving again.
What they got instead was a total shock. In 2023, inflation blasted past 4%, literally double their target. The heat was definitely on, but it was coming from all the wrong places.
And this slide really breaks down the problem perfectly. See, Japan wanted what you could call good inflation. That's where wages go up first, people feel a bit richer, and so they go out and spend more. But what they got was bad inflation. This was driven by the rising cost of stuff they import, like food and energy. Wages couldn't keep up, so people just felt poor.
So, after decades of trying to solve this one massive problem, Japan now finds itself facing a completely new set of challenges, and they might be even more difficult to solve.
The really crucial thing to understand is this: prices are going up much faster than people's paychecks. They call this the real wage squeeze, and it's hurting families all across the country.
On top of all that, you have this number. Japan has the biggest national debt of any advanced country in the world. It's more than double the size of its entire economy. And a massive debt like that makes every single decision way more complicated.
Yeah, it creates this incredibly tricky balancing act. If they raise interest rates to fight inflation, their debt payments go through the roof. Businesses are getting pressure to raise wages, but their own costs are also rising. And you've got an aging population that relies on fixed pensions, and suddenly that money doesn't go nearly as far.
So all of this has brought Japan to a historic crossroads. The 30-year freeze is finally over, but what comes next? Well, that's totally up in the air. But we are seeing a huge shift. After decades of just hoarding cash, that old deflationary mindset is finally breaking. People are actually investing again, pouring money into the stock market, which has been hitting highs we haven't seen since the wild bubble era of the 1980s. It's like the spell has finally been broken.
And that leaves us with the big question. Is this the start of a brand new era of growth for Japan? Or in finally escaping that 30-year trap of deflation, has it accidentally stumbled into a new one? A future where its famous stability is gone and a lot of people just get left behind.